Hello and welcome to Livewire's Buy, Hold, Sell. My name is Chris Conway. Investing in innovators, it's easier said than done. For every Pro Medicus or Life 360, there are plenty that don't make the cut. So how can investors separate hype from reality? Well, I've got two pros here to help me answer that exact question in Steve Johnson from Forager and Martin Hickson from 1851 Capital. We're going to start strong. Guzman y Gomez, of course, the seller of Mexican food here in Australia. Steve, I'm going to come to you first. Is this a buy, hold, or sell?
It's a sell for me. It is an innovative business, that's for sure, and I'm actually a fan of the product. I just think the market cap here is way, way too big for the opportunity that's in front of it, and it is a notoriously competitive, difficult space. They're an innovative business today. I can promise you there's another innovative business coming in the space tomorrow.
No doubt. It was down 41%, or it is down, I should say, 41% year to date. It had a bit of a shocker through reporting season. Martin, is there any value there? Buy, hold, or sell?
I've gone with a hold. I think it's a great product, great company. As you mentioned, the share price is almost halved this calendar year to date. Looking at the valuation, it still doesn't screen as cheap, trades on a P north of 100 times. But it does have a great management team led by Steve Marks and Hilton Brett, co-CEOs. As you mentioned, the stock sold off post the August reporting season. Like-for-like sales in that first 7-week period were up 3.7%, below what the market was expecting. But I think that over the next 6 months, if they can start growing their like-for-likes at a faster rate again and continue increasing their margins, I think the share price can claw back some of that lost ground. So I think it's a hold at the moment.
Next up, we'll talk Catapult Sports, the sports equipment maker, famous for the GP tracking software originally. Martin, I'll stay with you. Buy, hold, or sell on this one?
Yeah, I've gone for a sell on Catapult, and maybe that's just because we're jaded. We don't own shares in the company. We met the management team 12 months ago and didn't buy. They've done a fantastic job growing their athlete tracking software. They've moved into video as well, so they've done a great job. Over the last 12 months, the share price has tripled, now has a market cap north of $1.5 billion. It's only just profitable, so it is quite expensive. So at the moment, we think it's a sell.
Up 181% in the last year. I imagine this guy's got a smile on his face because I know he's held it for a while. I actually spoke to the CEO, Will Lopez, in May this year as well. Pretty compelling story. Steve, I think I might already know the answer to this one, but buy, hold, or sell for you?
I've probably got the opposite problem from Martin. It's done well for us, and I am still saying buy on the stock. I will caveat that by saying, for some of the reasons Martin has talked about, we have cut our weighting here quite substantially. This stock was 10% of our portfolio at one point. It's about 3% of our portfolio now. And the only reason it's 3% is because I think this business can grow a lot for a very long time. And I think the incremental economics of what they are doing are very, very strong. There's a new management team has come in. They promised the market 3 years ago that, and this had been their problem, that they were growing but not generating any profits. They promised the market 3 years ago that every dollar of revenue that we add here, you're going to see 50% of that as incremental profitability. And they've been doing that really consistently. And I think on the innovation front, the adjacencies here are really obvious to me. They just bought a gym business. There is a lot more they can do in sport if they can become that platform for these professional sporting teams. There's lots of other software that you can plug in.
Next up, we'll talk about buy now, pay later company Zipco. Steve, I'm going to stay with you here. Buy, hold, or sell?
Probably at the opposite end of the spectrum on this one. It's one that we've missed, and I think it's one that we could have found, so a bit frustrating, but similarly, the share price up a very, very long way over the past couple of years. I'm going to actually say hold because I think what they're doing in the US is very impressive, and it's a huge market. So unlike when you've got a growing business in Australia, the limits on how big this business can grow are much higher. So I wouldn't want to be on the short side of a trade in the stock, and I'll say hold.
Steve, you're not wrong. Up 106% in the last 12 months alone. It actually had a cracking reporting season. I think it was up 20% odd on the day. Martin, buy, hold, or sell for you?
Yeah, Zip's a buy. It's our largest position in the fund at the moment. The CEO, Cynthia Scott, has done a fantastic job since she joined the business just under 4 years ago. She's cut costs, sold underperforming assets, and refocused the business on the US. The US now makes up 80% of the company's earnings. Still in the early days of taking share in buy now, pay later. It's 2% of e-commerce sales in the US versus 15% in Australia. Bad debts are under control. TTV is growing at 45% plus. We think the recent deals with Google and Stripe can accelerate that growth over the next 6 months. The share price has done well, but we still think there is a lot of upside for Zip, so it's a buy.
My favourite part of buy, hold, sell, I've asked the gents to bring along an innovator or disruptor with massive upside potential, but only if they can nail it. Martin, I'll stay with you. What have you got for us?
I've gone with eRoad. So it's a New Zealand-based technology company, focuses in the transport analytics space. They operate in New Zealand, Australia and the US. There's a couple of key regulatory tailwinds at the moment that we think can further drive profitability for that particular company. The first is in the US. The government there is introducing road user charges for all vehicles. So ERoad currently has a contract for commercial vehicles in New Zealand. So we think that they're well placed to potentially win that further contract. Will increase their revenue in New Zealand. And then in Australia, the government's talking about introducing road user charges for EV. So another significant opportunity for ERoad. 400 mil market cap. It's just gone cash flow positive. So we think there's still a further upside for ERoad. So it's a buy for ERoad.
Pretty spicy. Steve, can you top that? What have you got?
Spicy as well, a stock that we own called Plenty. This is a non-bank lender, and that non-bank lender space has been taking a lot of share from the big banks for a whole variety of reasons. But Plenty's pitch has always been it's got this software platform that is more efficient, does business better, and that's why they're going to succeed. It has been quite an asset-heavy business. Lending money requires capital, and that has constrained it. They did a deal with NAB 12 months ago to do the auto lending business for NAB. NAB doesn't actually have an auto lending product. They are now using Plenty's platform. I think this is the real test for this company. Have you got a platform here that works? And if you can sell that without having to provide the capital, you've got a really interesting, attractive business. So very interesting 12 months ahead for Plenty, and I think it's very reasonably priced even on what they're doing at the moment.
There you have it, ladies and gentlemen, two pretty hot ideas. Thanks to Steve Johnson and Martin Hickson. If you enjoyed this episode of Buy, Hold, Sell, make sure to give it a like, and don't forget to follow our YouTube channel. We're adding lots of great content every single week.